Hey, this is Rick Tobin from Premier Hotel Realty, and today we're going to do a interview with Ryan Dumas, and he's with GRP Capital. And we're going to go online and we're going to talk. We're going to talk financing because that's what Ryan does, and especially in this environment, there's a lot of things people have questions about. They wondering if lenders are active, wondering what's going on. Ryan, you want to tell us a little bit? You're in Fort Myers, and it's GRP Capital. Tell us a little bit about the company and what you do.
Just have been with GRP Capital for about 4 years. We are located in Fort Myers, Florida. I am in Clearwater, Florida. Of course, I'm not going down to the office in the last few months, but I've been doing hotel financing, all commercial financing, but a hotel is a good portion of it. A good portion of my hotel years are hurting, and a good bit of them are actually doing decent. So I mean, but a lot of the financing is on a halt. The CMBS market is not lending right now at all for hotels. They are lending for other assets. We can get it at another time, multifamily, assisted living, some other different assets. SBA is lending. Not all lenders that lend SBA, but the SBA was very busy with PPP and other programs out there. But the SBA is lending. We've gotten a couple of approvals last week, and we're getting a few in this weekend. This week, they are being a little pickier now. I know every area is different, but you're not getting the gross times 3.5, gross times 4 appraisal values. They are coming a little lower, so you don't want to. The sellers haven't really come down in prices in all the areas yet. I've seen a lot of ones in Georgia and South Carolina, Tennessee's come down in value, a little bit depending on what the amount is. But I'd say the average appraisal is coming in right around gross times 2.5. Yeah, I'm doing a lot of SBA financing. I think I have 12 loans in right now. We're waiting to get a few approvals here today. And then Friday, we should have a couple more. Our bank goes to, go ahead.
Yeah, we have a lot of people that either buying properties or maybe looking to refinance loans. What do you see rates? What's the sweet spot for the SBA loans that they're doing these days?
I mean, I see a lot of brokers that are coming in and charging whatever they charge and doing prime plus 2, 2.5, 2.75. Most of our loans are prime plus 1.25. Okay. Some lenders will do prime plus 1.5 for us or 1.75, but most of our rates are coming in at prime plus 1.25. Depending on risk and everything. And they're 25-year amortization. If you're closing the SBA loan by, I don't know the exact date, September 24th, 27th, you'll have 6 months of principal and interest paid. It's not deferred, it's paid.
Wow.
Yeah, really good programs out there. It's a lot easier to refinance an asset that, say it's a conventional loan at a 15-year, 10, or maybe even a 20-year amortization, and go to SBA at 25-year AM because you're doing better cash flow now. So a couple of the refinancing we're doing, they have a 5% rate, 5.5%, 6% rate. And I'm doing anywhere between a 10, 15, and 20-year amortization. So the one that has a 10, I mean, the payments can be cut, more than in half.
So what kind of
and then they're not going to make any payments for 6 months.
What kind of deal size?
The ones I'm doing right now are anywhere between 2 and about 6.5 million.
Okay.
SBA's limits 5 million, but you can do a pari passu, and the pari passu is going to be up to 5 million SBA, and then usually about $1 million range on the conventional piece that usually that same lender will have. Sometimes they'll reach out to their lender, kind of like a 504, but it's called pari passu. So we can do up to about a $6 million loan roughly on those. But most loans I'm doing are, $1, $2, $3, $4 million.
Geographic area, is that important geographically in the United States? Do you go anywhere, or particular Florida?
Anywhere in the U.S. as long as it's they're allowed to banks allowed to go and step on that property. So I mean, I have not done anything in Alaska or Hawaii, but I just closed in Utah, Wyoming, Alabama, Arizona. So I mean, we're all over the place. I do a lot of the AHOA shows. Last one was in San Diego. The year before that was in San Antonio, and this year is going to be in Orlando. So I meet a lot of hotel owners that have different hotels in different states, but it doesn't matter wherever you're at, as long as, you're getting close to meeting a debt cover ratio. You're a strong operator, or it's a good location. You have to have a couple of good, pros in there.
So some of the people watching this, the hotel owners may recognize that background. You've got San Diego. You told me that's from when you were at the whole meeting. So you're out there, you're active, you're talking to a lot of people. When you're seeing deals close now, have you seen them close in this environment? Are they doing anything different mechanically, notary, documents, appraisals? What any special considerations that an owner might want to know about?
I mean, there's a lot of different things going on to not make it too long. I mean, some people right now, the bigger hotels, the bigger brands with the tourism spots close to the stadiums where a lot of baseball, football, and a lot of events are canceled right now. Those were the banks used to look for how many demands you have around there. If you have 6, 7 demands, those are the ones that are usually affected right now that have a 5%, 10% vacancy.
Okay.
Last I looked at the SDR, they were down about 80% down in occupancy. So the appraisals they're coming in. They're looking at what is your occupancy now compared to pre-COVID. Are you looking at what your strategy is? What's your business plan? What are your projections? I mean, of course, the projections in January, February are different than they are now. So yeah, they're looking at a lot of things. They're looking at a hotel if it's in a beach area and it's very expensive, upper scale, mid scale hotel. A lot of the people in a recession right now might not be, maybe the first thing is going there and everything.
Yeah, so you and I are both in beach areas. I'm in the Fort Lauderdale, Pompano, Lauderdale by the Sea area. You're over in Fort Myers, Clearwater. So definitely we're going to see that impact. Do you have a feeling at all for what the appraisers are going to do? They're going to have a lot of, especially our tourist areas, going to have at least 2 months with little or no income for a lot of these places. I'm wondering if it's too early maybe to find out how the appraisers are going to handle that.
I mean, yeah, I mean, the appraisals are coming in at, gross times 2, 2.5 that I've seen so far. I mean, the ones that would have come in at gross times 3 to 3.5. So there is that problem. I mean, there's ways around these things. I mean, you can put collateral in their business, but, you don't want to, over leverage yourself. They're also looking at liquidity, because I get a lot of hotels that every year to 2 years, they're buying a new hotel and they don't want somebody that's buying a hotel right now or over leveraging themselves and don't have much in reserves. So they're looking at liquidity right now. They're looking at global cash flow. So if they have 4 or 5 other hotels, they're asking, what's the occupancy on those? So if they have a Best Western, a Marriott, and, a Hilton, and they're at like 5 to 7% in occupancy, they're going to be a little more careful. If they have a few independents and, some mid-scale hotels that are 40, 50, 60% occupancy, it's less risk for them. They know more money is coming in right now, and they're going to look at the STAR reports pre-COVID, and they're looking at them now. They're also looking at the weekly STAR reports the last few weeks to see if it's still dropping, if it's stabilized, or if it's starting to pick up. Like in Georgia, they fully opened up about a month ago. They're looking to see if they're ramping back up right now. That's good. It just depends on each city, each state, because everybody's opening up at different times right now. So the places that open up, if there's, no COVID injuries, death, and it is getting less, and tourism and everything else starts picking up, those will be the ones that start get financing first.
Gotcha. And we've been advising a lot of our contacts, our clients, to try and do whatever they can to improve the property during this downtime while they have a lot of empty rooms, while it's a little bit easier to work. If they have the finances to do that, we certainly want to get that money into the economy. The people doing the work are going to love it. If they need to borrow money, is that besides the stimulus packages, is that available out there? Any kind of short-term money that you deal with?
Well, there's a few different things. I don't really do much short term, but to 2 parts of that question. You want to be the most renovated on the block or where you're at, because if you show good pictures online and you look nice from the view, some people already book before they drive by there. But if you're the nicest looking hotel in that block, you're the ones that's going to get first. the most bookings, and of course customer service. But you know, I mean, back to the putting renovation there, you don't want to upload too much renovation there because, you know, if your ADR and everything, you know, is down in the area, big tourism area, and you have $1 million renovation, you know, go back to Choice, go back to your franchise and see if they can reduce that a little bit, because they're telling people with, you know, in other industries too, even multifamily, if they were going to do a value add and do a big renovation to, you know, instead of doing the granite countertops and some of those things, you know, paint it, make it look nice, upgrade some of the things in there, but don't spend too much money because it's going to be a year or 2 years to increase some of those ADRs. I mean, you can, not to scare people, but you can kind of look at right now as, you know, like a 2008, you know, recession. I mean, you know, once, you know, you get two quarters in a row, which March was the end of it. And then April, you know, the GDP going down. But the main thing is, you know, it'll get back up there again, but values aren't in as high as they were 2-3 months ago. And most people aren't understanding that. They'll say, hey, I got an appraisal in February or January for $6 million. I'm like, it's not worth that, just like 2008. But you got to think of those things. Some of the sellers are going to have to drop prices to sell. So, I mean, you know, there's a lot to look into. The price will be back there in a few years. There's going to be a lot for sale in the next maybe a year and a half. That's going to be a better price because of valuation. Most people still think that their asset is still valued the same price pre-COVID-19, but it's not.
Sure. And
So I mean,
we frankly see very little inventory out there. So what values do remains to be seen. There is a lot of money that we're seeing on the sidelines waiting to buy properties and waiting for the right time. They're looking for deals. We're not seeing the deals out there.
yeah.
May or may not come, but we see a lot of pent up demand to travel too. So we're optimistic that the economy's gonna slingshot back when it comes back. So any final advice?
But I mean, to finish that question where I didn't answer off, I mean, you know, somebody's buying an asset for $3 million and putting a $1.5 million renovation in there. You know, they just got to kind of watch and see that, making sure that area is picking up, because they don't want to put, you know, $1.5 million, you know, dollar renovation into a place that's not going to get that value at right away. It's going to be a few years, because a lot of guys I know will get a hotel, flip it that year, or flip it 2 or 3 years later. You know, values are going to go back up, but it's going to be a little slower. You know, market's going to jump. But I do a lot of renovation PIP money in with all of our loans. I think there was about 2 loans last year that I didn't do any PIP renovation money in, out of the, I don't know, 15, 20, 23, whatever it was, loans I did last year. So, I mean, you know, if I did a loan that was $3 or $4 million, needed a $1 million renovation, banks are going to be a little hesitant on that right now. If you need $50,000, $150,000, we can do that. And it's all going to tell. I mean, you know, I could talk to you in a month from now and things are doing better, or 3 or 4 months now, things are doing better. And say, well, Ryan said he wasn't doing much renovation money. So these things change. It's, you know, it's based on the economy. It's based on that location of the hotel. It's, you know, based on the person that's running it. They have a lot of experience versus somebody that's a first-time owner and they've, you know, been in C stores or whatever else it is. We can finance somebody that's been in C stores or gas stations, but, you know, if they don't, if they've never managed a hotel or anything else, you know, the banks, you know, they don't want to see much risk. So the more risk they see, the more money they want down, or the chances of them not wanting to give that approval. But I do a lot of SBA loans. We're doing some non-recourse. We do some conventional USDA, but we can do the renovation into the loan. I do have a few FF&E lending companies out there to work with, and you know, there's a few out there that, you know, I would not recommend to work with, that you know, take your first 2 months payment and don't pay you back or anything once they say you're not approved. So there's a lot of good companies out there. But you know, you're gonna pay a big monthly payment if you don't get that in with your loan. It's better to get an SBA loan 9 times out of 10 and get your renovation in a loan than to get a conventional fixed and then go ahead and get equipment financing for another company with a 3 to 5 year loan. You have like zero cash flow, very little.
So Ryan, everybody's situation
going
to be a little different. I assume it doesn't cost anything to give you a call and run something by you, how's the best way to get in touch with you?
No, I always give free advice. I mean, it depends on, people are just text me, hey, what's the rate? What are you financing? But I mean, I finance usually $1 million and up, conventional. Sorry, commercial assets. It could be independent hotels. I'll give my phone number in a second here. Phone number is 727-729-2647. I'm on Facebook a good bit. You guys can contact Rick or myself about my phone number. Any free advice, even if it's better to go to a local bank, if it's an easy deal, if you don't have any problem with cash flow, I can help you out with those things. It's not just about myself getting the loan. It's about the best opportunity for yourself, your future, and your partners that you're working with. So, I'm here for you. My name is Ryan Dumas. I work for GRP Capital and live in sunny Clearwater, Florida.
Okay, and we'll get your contact information in the comments so people can find you. I'm Rick Tobin. We sell hotels. We're based in South Florida, and you can find me on at premierhotelrealty.com. You can email me at rick@premierhotelrealty.com, and you can call me at 954-543-5411. And thank you very much for being on with me, Ryan.
Thanks, Rick.